Good day. It's not T with Travis. Coffee today. I'm busting out the hard stuff. Well, the market is kind of doing the whipsaw action again this morning. The Dow was down near 150 and came back, and it's about down 60. Mortgage-backed securities were up. Again, that affects your mortgage rates. They were up as much as 60 basis points, and they're back down to about 38 basis points up. Yesterday, at the end of close, mortgage-backed securities took a huge hit on the chin. They dropped nearly 100 basis points, 98 basis points. So a sad story, and again, not time to play with the market when you have mortgage rates that are floating. So I'd really encourage people to lock in right now, with a lot of times the option to even renegotiate with the investor to buy down the rate or to do a rate readjustment. Because yesterday I had a client that didn't want to lock. He was waiting to see what was going to happen, and yesterday it dropped 100 basis points. He had a $417,000 loan, and in a matter of an hour, to get the same rate he got an hour earlier, it would have cost him $4,170 because of that big jump. So when you're on the fence on things like this, with this instability of this market, with the whipsaw action going on and the uncertainty, I would definitely recommend locking in. There's a lot of times options to float down the rate with another lender, or to renegotiate with the lender that we have locked in there with. So that's just a little side note. But today it has recovered some. Like I said, it's recovered back about a third of the losses yesterday. But again, it's been all over the board this morning. Reasons for this: obviously the Senate has jumped in, not waiting for the House of Representatives to come back from their holiday and voting tomorrow. The Senate's actually working on a bill right now, and it's almost the conclusion of the bill. They're going to vote on it tonight before I think end of business, or maybe even this afternoon late East Coast time. But basically they've added in some terminology that would allow tax breaks for the middle class. It also would allow tax breaks for small to medium business owners to give some relief in this crunch. And so I think it's going to appease the Democrats as well as the Republicans that are pushing this through. So hopefully that'll be some resolution. That's why the market is stable today. That's why there's a lot of talk in the European community. The European Bank and the British government, they all want to actually work together on this on a global financial level. And they're talking, they want to meet this weekend with our Treasury and our Fed Chairman, Ben Bernanke, and try to come to a global solution to this, because it is far-reaching around the world right now, the problems we're having with banks not lending to each other and just a short-term credit crunch. So that's interesting to see us working on a global economy, not just peace, but in finances too. So it's actually encouraging. Bad news for Ford this morning. They showed a 38% decline in sales this month, worst month of the year for them. And obviously not good news for any of the other auto manufacturers. As those numbers come in, I imagine they're going to fall in line. Any of the big SUV type vehicles like Chrysler, as well as Chevy. So that'll be interesting to see how that comes out. Also, the ISM, Supplier Manufacturing Index, it came in lower than expected. Good news though is the ADP, which it's been revised, and ADP is not a real strong indicator of accurate job numbers, but ADP showed only 8,000 jobs lost in the last week when there was anticipation of 53,000 lost. So that was some good news for the economy as well. But right now, the issue is the Senate bill going to pass today? So many people are sitting on their hands waiting to see what's going to happen. Money's being pushed all over. U.S. Treasuries took a huge hit yesterday. Basically all the money that came out of stocks and went into U.S. Treasuries on the 778-point decline a few days back on Monday. Basically all that money was pulled back out of Treasuries and put back into stocks because of the deals that were out there. Again, companies that had nothing to do with it, NASDAQ in the computer-related services field, Apple and Google and different things like that, and Intel, all took some pretty significant losses. And so money's pushing back into those businesses and stocks, and rightfully so. There's some good deals out there. So right now, until the Senate passes this bill tonight, if they do pass it, if it does not pass, I think we're going to see another 700-point decline tomorrow, if not more, until the House gets back and there's some resolution to this madness. So hopefully that helps out a little bit. But again, even though bonds are up today, I would lock in your mortgage rate. I just wouldn't take the chance right now with the opportunity, a lot of times, like I said, to float down with another lender or renegotiate your rate. And so if your lender's not willing to do that, then that's time to check for another lender, because a lot of times if you're with a bank and not a broker, they'll lock you in once and then they're stuck with it. So I encourage you to call us if you have any questions. We look forward to serving you. Have a great day and be blessed.